Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, let's start off with last week's trade, which was a long of the Aussie Top 40, and it looks like it's playing out quite nicely for you.
Yeah, it is working out quite nicely. Regular viewers will know that this was something that we switched. We swung it from a short position into a long position, and now the long position does appear to be working out quite well at the moment. So let's have a quick look at it. And what's on the chart at the moment is a chart of the Top 40 future. This is the September future. It expires next Thursday on the 19th of September, and this is a 1 hour chart. So every little candlestick plotting that you see on this chart represents 1 hour worth of trade. So to give you an idea, that over there is the 12th of August. So we're looking at approximately a month's worth of trade here on the Top 40 future, and looking at it hour by hour. Now, what I'd identified last week was that we had this rather rare diamond pattern that had formed on the Top 40. And those can be either a continuation pattern of a trend, which was the case here, or they can sometimes mark a top, in other words, a change of trend. Anyway, as it turned out, this one appears to be a continuation pattern, and it broke out to the top side. And on that breakout, I went long of 2 Top 40 futures contracts at a price of 38,560. Now, every 1 point on this index future represents 10 Rand. So effectively what I was doing there is taking an exposure of 385,000 Rand times 2. So we're talking about about 770,000 Rands worth of exposure to the market with these 2 contracts that I traded. And then I put a stop loss at 38,200, which effectively would have been a move below those prior low points over there at the bottom of that diamond pattern. Anyway, as you can see, it's working out fairly well. We have seen the market drifting up. It actually opened very strong yesterday, being Monday, at about 39,400. What did concern me a little bit, though, is yesterday's opening gap on the market. You can see that area that I've circled over there shows a very strong gap at the open, and then the market basically just dribbled away for the rest of the day, and it actually ended, in fact, it went slightly into negative territory at one stage.
Yeah, and I saw a lot of frustrated comments on Twitter, which is quite a cool medium to check what the sentiment of the market is, in as much as anything else. And yeah, there seems to be a lot of frustration that the market is just kind of proving a little bit directionless, in the last couple of days.
Yeah, well, what caused that big spike up at the open was the fact that Lawrence Summers, he's one of the 2 chaps who's in the running for the top job at the Federal Reserve in the US to replace Ben Bernanke. It's him and Janet Yellen. And he's quite a lot more hawkish in his approach. Janet Yellen is quite a lot more dovish in her approach. Anyway, he's withdrawn from the race for the top job. And the market interpreted this to mean that that's effectively good news, because it will mean a continuation of the accommodative monetary policy that the Fed has become used to under Ben Bernanke. Anyway, that news seemed to quite quickly fizzle out, and the headlines doing the rounds were that the Fed will be guided by the data that comes out anyway. So don't get so excited about the fact that this guy's pulled out of the race.
And also I think that the fact that you're going to have Fed policies being decided on now without actually a leader by the time these policies also play out in the market.
Yes, that's it. Anyway, so as you can see, as illustrated there, we had that big gap up, and then the market just fell away after that. So now we sit in a rather interesting situation. This week's got a lot happening. We've got the futures closeout, which is on Thursday, and then the big event internationally this week will be the FOMC meeting, the Fed meeting, when they decide on whether they're going to be tapering off this quantitative easing, these drugs that the markets have been on for the last 4 years or so.
Yeah,
that's it. So the patient's been on life support, and now they're slowly but surely looking to take the life support away. And how's that going to happen? Now, what's being priced in is that the Fed currently buys back $85 billion worth of treasuries every month, effectively. And the consensus view out there is that they're going to probably scale that back by 10 billion. So they'll still be buying back $75 billion a month. But so it's obviously slowing the rate. Now, the key is that the market's really gone into sort of wait-and-see mode ahead of this announcement. The volumes have been desperate. We saw volumes 40% below the average yesterday, being Monday. And today's, I think, volumes are also quite low. And you can see that, by and large, our market has been tracking around this 39,000 area on the top 40 over the last day or two. So, be that as it may, what I've decided to do with this position is I've actually sold one of our contracts. Okay. So we went long of two. I've decided to sell one at 39,030 this morning, and that's enabled us to bank a profit of 4,665 Rand. I am still long of the one other contract.
Yeah. You're just basically locking in a bit of cash.
Yeah, I'm locking in a little bit of the profit. And I think, what I often say to people is if you're in a position and you're a little bit unsure, then close half of it. Then you can only be half wrong. Right, on the remainder. So that's what I've done here. I've closed half of this position. We're still exposed to the upside if the market should rally further from here. If it starts to come down, well, then at least we've locked in some of the profit. So I suppose I'm hedging my bets a little bit in both directions. The other important thing to remember is that this is a September futures contract, so it actually expires on Thursday anyway. So I could potentially, well, I could roll it forward into the December futures if I really wanted to. But what I'm most likely going to do here is probably just leave it to expire, and then we'll see how the futures closeout works on Thursday.
Garth, I suppose, everyone is sitting by on the sidelines waiting for the market, waiting for Ben Bernanke to announce whatever he may announce. But if a lot of it is priced in already, is it possibly the case that nothing will happen at all on the market?
Yeah.
I mean, what would you say is the most likely outcome of the Fed's announcement on Thursday?
Well, I think if they come out and they announce what's expected, then you probably find it will be a bit of a damp squib, and then markets will just say, oh well, we knew that anyway. $10 billion a month, less less quantitative easing, whatever. However, if they decide to delay the tapering to, say, the November meeting, then that would probably be taken very positively by the market. Or if they came along and they said, we're not going to cut by 10 billion, we're going to cut by 20 billion a month, the market might view that slightly negatively. So I think anything that deviates significantly from what the consensus expectation is will move the markets. But if it comes in line with what we're expecting, then you probably find there won't be a hell of a lot of reaction.
Okay. All right. So this is one of the latest trades, and you're still open on one futures contract. What about this week, Garth? And obviously this all relates to what the Fed is going to announce, because it's a trade on the Rand dollar. Yeah,
I'm doing a trade on the Rand dollar exchange rate here, and it's a short trade, shorting the Rand. In other words, expecting a period of Rand weakness after this. So what we've got here at the moment is a chart of the Rand dollar exchange rate over the last year or so. That trend line that I've put onto the chart there actually goes back about 2 years or so. That's a weakening trend for the Rand. Now that shows a major area of what would be support there at 9.50 Rand, which is still some way away. Yeah. But then there's another area at the moment, which is currently where we're trading at the moment, which is around about 9.80 Rand. And the currency's pulled back into that area now over the last day or two. There's also what we call here bullish reverse divergence. So in other words, your stochastic oscillator is making a lower low, yet the price is actually making a higher low. And that does tend to often resolve in a sharp move in the direction of the trend, which in this case would be further up, a move up. So given that, I've decided to go short on the Rand at a spot price of 9.81 Rand. Stop loss is 9.69 Rand. And my target here is around about 10.40 Rand. That's probably a sort of a best case scenario.
Yeah, I mean, that's quite a blowout.
Yeah, it would be quite a move. So, you might find I need to, if it works, I might need to bank the profit a little bit sooner. But if assuming everything does go according to plan here, that's what our risk to reward ratio would look like, with the red block there indicating the risk, the difference between our entry price and our stop loss, and the green block indicating our possible reward if this trade should work out.
And so basically going back to the top of that trading range. Yeah. So where we were a couple of weeks ago, really.
Yeah, not long ago. Only in sort of the end of August, we were up at about 9.40 Rand, 9.50 Rand. I think it's interesting from a timing perspective. Sorry, yes, 10.40 Rand, 10.50 Rand. It's interesting from a timing perspective with the Fed announcement being this week, because if they do start to taper off, you could find that potentially results in a little bit of negative response in emerging market currencies, potentially, which would then play into the hands of this trade. Given that our Rand has strengthened by close to 5% in this month, and it's been the strongest performing emerging market currency out of 24 currencies. So, you would expect a little bit of a snapback from here. But look, let's see. We're doing this trade. We're not doing it with a big amount of risk, because I think that you've got to be cautious given the background environment at the moment.
Yeah, given that everything is so uncertain. So Garth, in greater detail, could you take us through the mechanics of that trade?
Well, I want to just quickly first show you, we're using a currency future in order to effect this trade. So a lot of people ask me, how do you do these currency trades? So this would be the December 2013 Rand dollar contract. Every contract represents $1,000 on these currency futures contracts. And I'm using a spot rate of R9.81. Now, the futures bid-ask spread at that point was R9.93 to R9.94. Now, you might say, well, why the difference? If the spot rate's R9.81, but the futures are what, 13 cents higher, well, that difference is time value. We're buying effectively 3 months worth of time value here. Because this contract expires in December, there's 3 months worth of time value, and that's what that premium represents. And then the other thing is just to note here, the bid-ask spread. What you'll typically see if you look at a currency or any trading screen for that matter, you'll have the buyers on the left-hand side on a depth screen, and then you'll have the sellers on the right-hand side. Now, what a lot of people say they can't seem to get their heads around is, if I'm going short the Rand, I'm actually going to be buying on this side from the sellers. In other words, I'm actually going long of dollars, and that's what what this represents. If I'm going short rands over here, I'm going long of dollars. That's effectively what I'm doing. A lot of people say, but if you're going short, surely you're going to sell down to the buying price and then hope the price falls. But because this is a currency, it's different. We're expecting the Rand to weaken. So we're going to trade, we're going long dollars, short rands, if that makes sense.
Because the currency really is only a value against another currency, isn't it?
Yeah.
Whereas a share has its own value, whereas a currency is traded against another currency.
That's the difference. You see, you've got two moving pieces here. You've got a dollar and a Rand, okay, and they can both move. Whereas every other tradable instrument that we are used to, like a share or the gold price or an index or whatever, we were comparing it to something that's fixed. The actual underlying instrument that's got a price is it's a share, or it's an ounce of gold or whatever. It's a unit of something, and that unit doesn't change. Whereas when you're trading currencies like this, you've effectively got two moving targets, and that's why I think some people battle to get their head around this.
And presumably it's why it is for a slightly more sophisticated trader, currency trading. And I'm sure there are many people who just specialize in it, but I guess for the average person like myself, this is not really an option.
Yeah, look, I suppose it is a slightly more sophisticated concept, but once you can get your head around what I've just mentioned, now it's not that difficult.
Maybe I should do this before I go on my next overseas travels. Garth, okay, so that sort of sets out and in more detail.
Well, let's just have a look now at this actual trade. So what we've done is we've gone short to the Rand at R9.81 spot price, which translated into R9.94 on the currency futures. My stop loss is R9.69 on the spot rate, which translates into R9.82 on the currency future. My risk is 12 cents per contract. I'm risking only 1% of our capital on this trade, so that's 3,520 Rand, which is 1% of our account. I divide the risk, or the capital risk, divided by the risk per currency future in this case, and effectively it says I can take an exposure to $29,333. So given that every currency future represents $1,000, I can therefore do 29 contracts in order to effect this trade.
So you've rounded it down slightly?
I've rounded it slightly down, yeah. Okay. Target is R10.40, as I mentioned, and then my risk to reward ratio on this trade is 1 to 4.92 if it works.
Okay, yeah, if it works, 10.40. I sincerely hope there isn't a blowout, because I'm going travelling in a couple of weeks, very selfishly. So Garth, then obviously the portfolio is looking quite good, because it's now above the mythical 350,000 level.
Yes, that's it. So we've up over 100,000 Rand on the portfolio for the year to date. Bear in mind we start with 250,000 each year. We're now up nearly at 353,000 Rand. So that's 41% up for the year to date. You can see the recent trades that we've closed out. We've still got our September futures contract where the total mark-to-market profit, including the one that we sold, is 9,365 Rand. And then here's our position on the currency futures, where we're short rands, long dollars, and we're waiting to see what happens there.
Okay, and Garth, very quickly to end off with your upcoming course.
All right, I've got an Understanding CFDs course on the 3rd of October. It's an evening course, it's 2 hours long, and then high probability trading courses, 4th of October, it's a Friday, and then in Cape Town on the 12th of October. Anybody that's interested in attending one of these courses, welcome to email me, garth@traderscorner.co.za, and I'll send you the details.
Okay, great. Garth, thanks very much for joining us as always. We'll see you next week. That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.